Recyclico, making lithium-ion last forever. Recyclico's patented recycling process achieves up to 100% recovery of battery metals from lithium-ion batteries for electric vehicles, including cobalt, lithium, nickel, manganese, and aluminum. Recyclico Battery Materials Incorporated trades on the TSX Venture AMY, on the OTCQB AMYZF, and Frankfurt ID4. For more information, visit recyclicode.com or phone us at 778-574-4444. Recyclico, making lithium-ion last forever.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report, online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
Oh, great to be with you again, Jim.
Calgary just got hammered by a huge hailstorm. How did you do?
Well, I'm in the west side of the city, so it's the northeast side of the city that seems to have a temperature problem, where because of maybe the elevation and where the winds are. Some people were talking about tennis ball sized hail. Pictures were in the front of the Herald showing the damage to buildings, to cars. Not as bad as I think it was just a couple of years ago when it was when a lot of the northeast of the city got hit hard. But a lot of maintenance is going to happen here, and question mark about insurance. So, when we had the flooding, there were some insurance companies that treated their customers well, others did not, and battles occurred, court cases, etc. So again, given it's an area that has a problem, I think insurance is going forward is going to be the critical feature, going in terms of the problems. The front of today's Herald, has a picture of the damage by the Calgary airport of homes there. And you can just look at it, and the front of the buildings, the wood, whatever they were using for the exterior. It's not stone. You don't see a lot of stone in that areas of town because of they're trying to find materials that make the house prices affordable. But it doesn't look very nice, and the houses are livable, but the damage is going to take a while to repair. And if you have a repair company, you got yourself a lot of work ahead of you to keep yourselves busy.
Even airline service affected because some WestJet airliners got damaged.
Yeah, that's in the front of the paper as well. 16 planes,
wow.
16 WestJet planes grounded by hailstorm, and they require substantial repairs and inspections before returning to service, according to WestJet. So, and dozens of flights were canceled. We're now going back to stage 4 water restrictions because of another pipe area that they found with weak spots. So you just think about that in Calgary, and what does that mean for other cities that may have used the same materials, be it Vancouver, Toronto, Ottawa, Montreal. In the pipeline business, you have pigs, which go through the pipe and check it on a regular basis. Have the cities been doing that? I think the answer is no, not sufficiently. And all of a sudden, a maintenance requirement is going to have to happen for all of these 50, what they built for 50 years may not be lasting more than 20 or 25. And you can do internal coating, you can do reinforcement, but that's going to require a lot more municipal budgets going forward.
Yeah, and some of those old pipelines in Canadian cities were lined with asbestos.
Yeah, adding one more to challenge and one more thing for lawyers suing on that basis.
Yeah, the only people who do well in a crisis are the lawyers.
Yeah, and insurance companies when the rates go back up go higher.
Yeah, so a major hit for the Canadian insurance business.
Yeah, they'll probably, I don't think it'll be as bad as the flood. That was probably the worst event here. The fires, can be big, as we know from what's going on in BC. Those are going to be big insurance hits too. it's a bad year. The climate change is real when you look at, what's going on. You have flooding in, places in Florida now that you wouldn't have thought would get flooded. So, the reality is the climate is changing, and man has some responsibility to it. But whatever we do in North America, and you get Canada, the government in Ottawa trying to come up with more and more restrictive, issues, just like they're doing now, with near the oil sands projects with the First Nations. But the reality is, if India and China don't do anything substantial, then whatever we do in Canada, whatever they do in the States, whatever they do in, the OECD, isn't going to matter.
Yeah, Canada, 2% or less of the world's emissions. Every carbon tax in the world isn't going to change that.
No, and coal-fired power units are being built, at a very rapid pace in India and China still. It's not like they've said, okay, no more. We won't close down the ones we have, like we did in Alberta. TransAlta got rid of all of their coal-fired facilities. But you've got an issue here where because they have adequate coal, or they can import it from Australia, or even from the U.S. coming through the ports in BC. They're still importing coal because the cost per on a power basis is cheaper than LNG, and so in many cases, if they have the coal and it's the jobs, from that, in terms of the power, generation, they're going to stay with that, at this point, and it's almost contradictory that China's still building coal-fired plants, and yet they're pushing EVs faster than anyone. So it's like, on one side we're doing this to make the environment better. On the other side, we're doing the other side. So it's just very contradictory.
Also, Canadian policy, Prime Minister Trudeau turning down Germany's request for LNG. So they opened up more coal-fired plants.
Oh, but we're going to sell them methanol. Like, how the hell, no, sorry, not methanol, hydrogen. And, where are we going to, how do you create the hydrogen? How do you transport the hydrogen to the East Coast?
Hydrogen takes tremendous amounts of electricity to create.
Yeah, and, so
why not just use the electricity?
It's like they throw out these platitudes and all these, really strong environmental messaging, but nobody's done the homework to say, what's good. There was something on the press conference that Trump just had, where they were talking about bridges, and that if the weight of cars and the weight of trucks with EV, that are electric, weigh much more than current cars and current trucks, that are using fossil fuels, and so the bridges may not be strong enough to handle these heavier weights. And again, has anybody brought that into the equation?
Yeah. The price of crude, is that a concern?
Well, we're at $76 today, and I think there's $8 to $10 of war premium in there because they're concerned about what's going on in the Middle East, and if is Iran going to go at it? If you look at the data that came out, motor gasoline inventories were up 1.3 million. The total stocks, including the SPR, were up 1.9. The surprise was, they keep on talking about, that the U.S. industry is being stopped by democratic policies, and yet the oil production last week went up to a record high, 13.4 million, up 100,000 on the week, and it's up 800,000 from a year ago. And the offset to that is demand is lower. Demand was down 750,000 barrels to 19.97 from 20.72, and gasoline demand on the week was down 282,000 from 9.25 to 8.97. And if you look at year to date, total demand is up only 0.3, and that's because of other oils that make all the plastics and the things we use in daily consumption. Gasoline demand was down 0.8% this year versus last year, year to date, 8.82 versus 8.89. So gasoline demand is down, and again, it's the consumer pressure on their wallets. That makes it tougher. We keep on seeing comments about more layoffs occurring in the restaurant industry because of the pressures there. Food costs and everything, and the labor costs are penalizing. We're seeing more and more announcements of the commercial real estate where there's more pressure on, and things like the CLOs. The distressed measurement of the collateral losses has gone up because people are more and more worried about that. Regional banks that have a large amount of commercial real estate, there's concern about that. And we talked last time about Walgreens closing down, I think, a quarter of all their stores in the United States. So, we're really looking at challenges here. There's question, are we going into a soft landing or are we going into a recession? The consumer side is looking more and more that the middle class and lower income are definitely in recession. But, with the stock market up till, a couple of weeks ago being pretty buoyant, especially with the AI craze, the wealthy, the high income earners, those that have, big stock portfolios, they've been spending, enjoying, it's like the roaring 20s at the end. The question is, where do we go from here? I think the job number wasn't a good one. There's the birth, the composition of it. People are questioning that, that there was 250,000 jobs added, and the number 115 meant that there was, if it wasn't for that, birth death, statistical change that they made, it would have shown a negative number. So I think the numbers in the next month or two are going to be watched. The pressure is on the Fed to cut in September. Is it going to be 50 or 75? 25 would have been, something that the market would have been expecting. 50 to 75 would say maybe there's some problems out there. The Fed finally realized that the economy is in trouble. And, the stock market crack that we saw just in the last, since the beginning of August, when Dow was at 41,200 and it went down to 38,500 with those big down days. And it was the AI, anything to do with semiconductors or AI that got hit the hardest. And it was because of skepticism. Are these, this AI, world is real, but can it be turned into profitable businesses for the companies? And that's becoming an issue now where people are saying maybe not. And so the valuations still are pretty lofty. And I think in the next few weeks, we could see much lower prices in the general market. If that occurs, I think we're going to see somewhat lower prices for the energy sector. And if the war premium comes out, I think we're going to get a fabulous buying opportunity sometime in September, October, with the price of oil under 70. The bullish percentage index in energy was in the 60s just a few weeks ago. It's now in the mid-20s. I think it's going to go below 10. Historically, that has been a fabulous buy signal. So I'm on the watch list to when to send out new buy recommendations. So if we have another, period of sharp declines in the general market because of the balloon bubble bursting more on the AI craze in the general stock market, I think we're going to set up. My view is the Dow goes to 36,000, maybe 32, 33 in a worst case scenario. Crude oil goes under 70. The TSX Energy Index goes, from the 270s down below 240. And if that's the case, a lot of stocks will be in very bargain territory. And I think we're going to be putting out a lot of buy recommendations with our action alert system that we do with recommendations. And also we're building up a fabulous list of companies to come to our October 19th conference, which we call the Catch the Energy Conference. We've had that since 2018, except for the COVID years. And we're getting a fabulous response from the energy industry that want to be in front of individual investors. They do a lot of IR in the institutional world. There's very few opportunities to do it in the individual investor world. So we'll be talking with you in future future discussions, and we'll be talking about access for individuals to come to the conference.
We'll have more with Josef Schachter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. Josef, is there too much attention paid to the Fed lowering interest rates?
Well, I think that, the question is how much and for what reason. So if the slowdown is like the next jobs report is again below the 180 to 200, which is needed for, just the growth of population in the United States, if it's a muted number like we had 115, or even if it was under 100, the pressure would be on for a 50 beep or more cut. Some of the most aggressive are now calling for a 75 basis point cut in rates because of the problems in housing, and of course the auto loans. The number of delinquencies is now at the highest level, even higher than '08. We're now seeing real estate problems that are extreme. We're now seeing a little bit of lowering of mortgage rates, but they've got to come down a lot because you just compare them to 3-4 years ago. So you're looking at pressure from day-to-day shopping at the grocery store, and then also this issue of housing and budgets at the for individuals, be they middle class or lower income, is being tight, is very stretched and tight, and you've seen many articles that people are don't have enough for an emergency expenditure. They're living from paycheck to paycheck, and any emergency, be it a health emergency where you need doctor access, dental access, your car breaks down, the system is very narrow from staying economically positive for the U.S. economy, or does it mean we're going to go into recession? And then how severe is that? And again, that's going to matter by how much military spending is being done. And what does that do for other spending by the U.S. government? The U.S. interest expenses are going up. They just had yesterday a 10-year auction and a 30-year auction today for these longer-dated treasuries. And CNBC gave the 30-year a D, and the one yesterday they also said was a very poor auction, and yields have gone up a few basis points each day. So you're looking at the Fed doing, or the Treasury, raising most of their money in the money market area, because they don't want to disrupt the long end of the bond market, which they don't control. The Treasury short-term market, 3-month T-bills, they do. So that's where they're borrowing, because they're afraid that if something did happen in the long end, that would impact corporate rates as well, corporate borrowing, and that would really make things tough. Because of the size of the deficits, $2 trillion this year, and probably the same next year. And at some point, there's a break point where, you can't find natural buyers. China and Japan are not buying U.S. paper anymore. In fact, China's a seller. And individuals, do they really want to lock in, 4% interest rates when they think inflation is higher than that? So the issue that came out today, the banks had to take it, because there was, and the bid to cover ratio was very poor. So any trouble on the quarterly refinancings just make the job for the Treasury and for the federal government in the states problematic. And I think that's going to be one of the pressure points is to keep an eye on how does the U.S. government fund these massive deficits?
Is there a possibility that every government in the world is just going to decide, hey, we're not paying our debt, we're starting at zero again?
Well, what we've seen in the past is where we exchange new debt for the old debt at maybe 30 cents or 20 cents on the dollar, or they do lower. They'll exchange your 5 or 6% yield debt for 2% debt, but you'll be whole on the principal. So there's always creative ways by the investment community and the governments and the issue is, with $35 trillion of debt in the U.S. I don't know the number in Canada, but it's probably horrific relative to our population. That in Europe the same thing is occurring. Japan has been crazy about that for years, and that's why that carry trade thing was very painful for the stock market. Was people were borrowing at minimal interest rates in Japan, taking the money and buying treasuries or stocks with good dividends in the States, and then all of a sudden when they started raising interest rates in Japan, and the cost of borrowing went up, the yen took off, and then all of a sudden a lot of people were offside, and they had to cover, which was why we saw those painful days in the stock market. But the unwind of that has not completed. So I think that that's one more thing on the radar where we were in a very euphoric situation in mid-July and then into the end of July when we were over 41,000 on the Dow, and now we're having the wake-up call that hey, there's some problems out there. They haven't gone away, and in fact, if they get ugly for any specific, as they talk about black swans. The Japanese carry trade was a black swan. If we have a negative job number, between now and the election, that's a black swan. If there's more regional bank problems or bank problems anywhere in the world, we've seen, write-downs by, South Korean banks of their real estate in the States, because they had commercial loans, and of course the value of those buildings are maybe not even worth 5-10 cents on the dollar from where they bought them and put the mortgages on. So there's a lot of reasons to be near-term concerned. We've been recommending to clients to have cash reserves, take profits if in some of the lofty stuff that have gotten significantly overvalued, like the tech stocks, and be waiting for the market to go from euphoria and overbought to fear and cheap prices again. And I think we'll see that sometime in September, October, that we'll have bargains again, and that I think is going to be when people should be willing to put their capital to work again. The last time we had really cheap prices in the market was September, October of 2022. We had a decent correction October, November of 2023, but we need to have something that takes away some of the euphoria here. There was some big fear a couple of days ago. The plunge protection team of the Fed out of New York came in and stopped the calamity from unfolding even worse. But at some point, some event, just like we saw with the Japan carry trade, they can't stop the meltdown or people selling because of margin calls. So I think that we're not over this shakeout. And I think people should be, using days like today that are up to raise some cash, and definitely don't use margin at this point, because if the markets implode or plunge or crash or whatever the term you want to use, those margin positions are going to kill you, and especially if you're in the very high flyers that can turn down 5-10% in a day, as we saw last week.
Joseph, anything else we should be keeping a close eye on, or do you think we covered it all?
Well, I think we covered quite a bit, but the energy sector, natural gas has been horrible in both sides of the border, but there's a number of new LNG plants coming on in the States. We have the Coastal Gas and LNG Canada coming on by the end of the year, shipments on a regular basis in 2025. I think people, when they're looking at energy, keep an eye on the natural gas-related names. But they've been very depressed. The ones that have held in better are those that are liquids-rich, have condensate or oil, so they're getting those volumes and getting good prices. But the natural gas ones that are more drier, those stocks are very cheap. And I think that, going into 2025, they could be the best part of the upside in the energy sector. So I'm bullish for the long term. I'm cautious for the next month or two. And I think having, some cash on the sidelines is prudent, and you'll have the opportunity, hopefully, to get some great bargains. And maybe the next time we talk, we can chat about that.
Joseph, thank you so much for chatting with us.
My pleasure as always, Jim.
My guest has been Josef Schachter, founder of the Schachter Report online at SchachterEnergyReport.ca. He was speaking to us from Calgary. If you have any questions for Joseph or for any of our guests, you can send them to info@HowStreet.com. We'll ask those questions for you. Our YouTube channel is Talk Digital Network. Find us on X @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.